64% of Americans currently think that we are in a recession. While a recession could be on the horizon for 2024, according to global economists, there could be a tough time for the economy with a recession, but this also gives you a big opportunity during the downturn to go ahead and start investing. Today's video, we're going to be looking at how to use an economic downturn to your financial benefit. Now, of course, this is brought on by Warren Buffett. There's a lot of anxiety and a lot of things when it comes to a recession, from the age-old expression that millionaires are made when markets are down. If you checked out my portfolio videos in 2022, when the market was down 21%, I was investing like crazy. Be fearful when others are greedy, and greedy when others are fearful. That is right. The economic downturn is really the best time to take advantage of the recession. And of course, with the market at all-time highs, if there is a correction, this is the time to do it. Now, of course, starting with lowering your average cost. Most of you know I do use dollar cost averaging. Typically, the stock market sell-off starts about 6 months before we see a recession actually hit. This drawdown could be very fast and could be faster. In the first half of 2022, we see in the S&P 500 down 21%. That is a pretty big dip. And of course, buy the dip. When people are selling, it is time to buy it. Looking at brokerage statements, looking at investment accounts, it looked absolutely horrible. You can see where your investment would go. And of course, it's painful to look at those brokerage statements at times when we're seeing kind of a recession or a downturn in the market. But when you think of the big opportunity, if you bought $5,000 worth of stock at $100 and now it's down to $80, another $1,000 invested would bring you to $90 per share. Not only is it easier to break even, but also the return on the previous purchase of $100 will result in a net profit rather than simply breaking even, making it really well worth it when you're investing in a down market. Now, of course, picking up cheap dividends. This is one, when stock prices fall, dividend yields increase. For instance, if a stock trades at $100 and a 2% yield, the same stock will be at a 4% yield if the price goes to $50. So if it drops 50%, the yield will actually double. That is twice as much income for shareholders who will hold that at a much lower price. Now, of course, you have to be careful with that, because if stocks are losing a lot of their value, could result in dividend cuts, meaning you're not going to see the full dividend, but a lot of companies that have been paying dividend for 20, 30, 50 years will go ahead and continue to pay out that dividend. Now, of course, this is a perfect time for me, and this is what I did, buying index funds. If you look at the ones that I hold, the VOO, the VTI, the VUG, a lot of those ETFs that I have, buying index funds, it is really, there's no concrete truth behind them not seeing really as bad as a recession as what we've seen. But when you look at a lot of the index funds, because of the indexes themselves, you're really not buying into one single company, you're buying into groups of companies, which if companies start failing during a recession, chances are that you might have a couple ones that are actually going to fail. You're going to have a lot that will still do incredibly well. This is the time for investors to load up on the index funds rather than picking individual stocks. When it comes to recession, it's very hard to determine which ones are going to be winners and losers because, of course, the economic uncertainty that we see. Historically speaking, the market indexes have always recovered and gone high and above and beyond. When it comes to navigating a bear market, you'll see a greater return with individual stocks, but the index funds are a lot less risky, especially when you're in a down market. Of course, this is also a big time to boost your emergency savings. If you're thinking of that emergency fund that you have, dumping as much money as you can in that emergency fund, really sitting on the sideline, making sure that you have a fully funded emergency fund before you start getting into the stock market, even in a down market. You should aim to have 3 to 6 months of emergency expenses in that account. If you're really solo, 6 months is definitely worth it. And also depending on the industry that you work in, because of course, this is going to be the recession time when you're doing the investing. Now, this will also drive interest rates lower. Now, that's exactly what we've seen. If you remember in 2022, we had rates that were incredibly low. When you look at the housing market, I refinanced at 2.5% on a 30-year mortgage, which was absolutely crazy. We were doing auto loans at the financial institution at 1.49%. That's right. It was literally on fire for people that wanted to borrow money. And of course, with the early stages of recession, good time to take advantage of the higher savings rates that we see. And of course, we're seeing them right now. High yield savings are paying 5%. if not a little bit more, which is kind of incredible to think and how much they're doing. Typically, by the end of the recession, the Fed has begun lowering rates, essentially to stimulate the economy and having more people effectively put money into it. In some cases, rates can fall very low, which of course triggering when we look at the coronavirus, when everything happened there, Feds lowered the rates to almost zero. It was essentially the Fed's fund rate was at zero, driving mortgage rates to an all-time low of 2.65%, which is crazy. Both a good opportunity for investors and a good opportunity for first-time home buyers. And of course, when it came to refinances, they said roughly 58% of Americans refinance mortgage during that time. And of course, when we look at the economic downtime, beefing up the professional skills, this is the time you want to recession-proof your job. You want to be relevant in the job market, be able to communicate well, advantages, and really adapting where it is needed so you can take advantage of continuing education. During this time, if there's new projects, if there's new things you can learn to bring to your job, it is going to make a big difference. Now, of course, when you start looking at communication skills, the verbal and the nonverbal, actively listening to the supervisors and teammates, always knowing your tone and knowing exactly how you're doing this. And of course, this is all around the recession. Again, 64% of Americans are saying we're currently in a recession, and it's really being felt with the individuals that are about the $40,000 to $60,000 earners, because now everything is exponentially more expensive. It is a lot more difficult to not only get things, but also get it at a good price. We've seen the cost of insurance go up. We've seen rent go up. We've seen food go up. Everything across the board has kind of increased. I know we're trying to get it under control to really make it work and get the economy, actually the interest rates down where they need to be, so we can continue and drive prices down a little bit further, making it affordable for the average American. Now, of course, guys, when you look at the economic downturn, you can really benefit from it in a couple different ways, which investing is the number one that I always look at. Like I said before, 2022, when we had a really down market, I was pumping money in there like crazy. 23 and 24, when we seen it come back, my portfolio in 2.5 years is up about 62%, which again is crazy. Remember, again, the famous words of Warren Buffett, where if people are, always remember the famous words of Warren Buffett, be fearful when others are greedy and greedy when others are fearful. Currently, we're looking at a very, very fearful society. And of course, not knowing what the economy is going to do, people are also scared of that. All right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.